plenty of people around the world who have been saying to themselves, well, there's uncertainty and I want to de-dollarize. I want to get away from the US dollar, the US system. And so I want to hedge. They're going to buy gold or they're going to buy Bitcoin. And so Bitcoin tends to be the second asset that's bought because they're really big pools of capital. They're not used to buying Bitcoin, so they go and they buy gold. But Bitcoin, I think now will start to kind of run here over the next couple of weeks.
Pompliano opens by zeroing in on one of the biggest underreported stories of the year, the stunning decline of the US dollar index, which is down roughly 9% to start the year, marking the worst beginning in its history. This isn't happening in a vacuum. According to Pompliano, the dollar's fall stems from a cocktail of political instability, waning international confidence, misguided economic policies, and mounting trade tensions, including protectionist tariffs. And here's the key takeaway. When the dollar weakens, Bitcoin, priced in dollars, strengthens by default. A falling dollar translates directly into rising Bitcoin prices for those measuring value through fiat lenses.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Well, I think that Bitcoin is a big winner from global uncertainty, and there's lots of uncertainty, but actually maybe the bigger story is that the US dollar index has actually been falling. It's down about 9% to start the year. That is the worst start in history. And if you go and you take a look as to why the dollar index would be falling, things like political instability, foreign confidence in the United States, disagreement over American economic policies, trade policy decisions like tariffs, etc., all drive the dollar down. And that's exactly what's been happening. And so for weeks now, we've seen this occur. And so if you have the dollar index falling, that means that the dollar is getting weaker relative to other currencies. Now, people usually think of the dollar in comparison to other fiat currencies, but naturally, if the dollar is falling, Bitcoin is another type of currency. And so therefore you're seeing Bitcoin strengthen against that dollar. The price is going up because it's denominated in dollars. Now, on top of just kind of the market structural things of what is the asset that it's denominated in, you also have plenty of people around the world who have been saying to themselves, well, there's uncertainty and I want to de-dollarize. I want to get away from the US dollar, the US system. And so I want to hedge. They're going to buy gold or they're going to buy Bitcoin. And so Bitcoin tends to be the second asset that's bought because they're really big pools of capital. They're not used to buying Bitcoin, so they go and they buy gold. But Bitcoin, I think now will start to kind of run here over the next couple of weeks. And what you can see is if you overlay gold and Bitcoin, usually as gold price runs, about 100 days later, Bitcoin's price then runs. And in terms of volatility, what you'll see is you'll see gold go up. It's had a great start to the year, about 30% year to date. Banner year last year for gold as well. But now Bitcoin will be very volatile to the upside. And I think that Bitcoin will outperform gold this year. And so it's just kind of a patient waiting game for people. But remember, when Bitcoin was at $76,000, $77,000, everyone was all scared. Now we're back to 90. There's a little bit of enthusiasm in the market. But 109,000 was actually the high of Bitcoin. So we're down still.
What was
but
the high?
as 109,000, I think. And so as Bitcoin kind of creeps itself back up there, next thing you know, Bitcoin will be $93,000, $94,000, $95,000. And people will be saying to themselves, like, what's going on here? But remember, Bitcoin was only $69,000 at the start of November last year. So we've gone from 69,000 to right now 90,000. There's lots of volatility. It's gone up, it's gone down, all this stuff. But Bitcoin still continues to go up over long periods of time. And I recently shared in the letter I write every day, the 4-year, the 200-week moving average. There's this guy who posted it online, and it's just up and to the right. And sure, it kind of smooths and stuff, but it never goes down. So over a 4-year time period, basically, we continue to see Bitcoin appreciate in price. And it just comes back to the idea that if you are a short-term oriented person, you're going to see lots of volatility. You're going to try to buy and sell, and you're probably going to be bad at it. But if you simply buy an asset and hold it for a long period of time, it goes up over a long period of time, and therefore it continues to perform well. And I like Bitcoin, well into the future. Listen, sound money principles are it's outside the system and no one can create more of it. And so what gold has done is it benefits from times of uncertainty, from global instability. It also benefits from de-dollarization, and it benefits from the US debt exploding and us printing money and devaluing currencies. Well, that's every country around the world is going through this. And so gold has actually done very very well. I think actually gold is outperforming stocks over various time frames. And so most people would say, well, I don't want to buy gold because it's a non-productive asset. But if you actually look at it, the single most important entire trend of the last, 20 years has just been they're going to devalue the currency. And so if you got that right, you made money. Right? You picking individual stocks, doing all stuff, like all that was just optimizations on a miniature scale. The number one thing you had to get right was be an investor and then get into assets that were going to benefit from the devaluation of the currency. And so gold and Bitcoin, big winners. Now, gold is being bought. And the reason why it runs first is because the smartest money in the world, the central banks, the sovereign wealth funds, the really big pools of capital, they are not, one, approved in many cases, two, have the muscle memory of buying Bitcoin, and three, they still are run by a lot of the most influential and powerful people in their organizations are older, so they're not comfortable with Bitcoin. So what do? They go buy gold, which is the analog sound money solution. And when they go and they buy gold, gold is not finite, but it is very scarce, and therefore it pushes the price up. And so we've seen that price appreciation. And gold bugs, again, congratulations, you've done a fantastic job. I think that they understand exactly what that tailwind is. I then go and I say, but the individuals, the financial institutions, now public companies, they're all starting to buy Bitcoin. And so depending on who you are and what was already in your portfolio, I think should really determine how you look out at the world in the future. So me, in my mid 30s, well, maybe getting to the higher 30s, but mid 30s, I hope that I have 30 or 40 years, right? And so 30 or 40 year time horizon, I think that Bitcoin will drastically outperform gold, because what I think is going to happen is there's going to be a bunch of boomers who own gold who are eventually going to transition their wealth to their kids. Those kids are going to be much more into Bitcoin than they are gold. Doesn't mean that gold's going to do bad. I actually think gold will continue to do very well because you have the central banks buying it and all this stuff. But I do think that the more volatile of the two assets is going to be Bitcoin, and so Bitcoin will outperform. And so for me personally, I don't own any gold. I own Bitcoin. Now, the reason why I don't own any gold is because I'm playing the same exact thing. I'm playing the sound money thesis. I just want to do it with the thing that is much more volatile and the thing that probably has more asymmetry to it. And so Bitcoin is my solution. But think about it if you are, a lovingly term, a boomer, and you're sitting there and you're saying, you know what, maybe I'm retired or maybe I'm close to retirement. I actually don't want something that can go down 80%.
Yeah.
And so I'm willing to give up the downside in order to, I'm willing to give up the upside in order to preserve the downside. The odds that gold goes down 20, 30, 40% is very low. But also the odds that gold goes up 200% in a year is also very low. And so it's just, what is your risk appetite? What is your volatility? Young people want the volatility. They embrace volatility. Older people, because of their life situation, it's very unlikely that they're going to do that.
He challenges the belief that tariffs are inflationary. In reality, he explains, the consumer impact of tariffs is muted due to multiple layers in the supply chain absorbing costs. In 2018, a 20% tariff on China resulted in only a 4% price increase. Tariffs, he says, are actually deflationary because they act as a consumption tax. People simply buy less. Here's the punchline. Institutional investors are realizing they can't beat Bitcoin. Pompliano repeats his mantra, if you can't beat it, you've got to buy it.
Bitcoin's return of 50 to 70% annual compounding return is actually not as attractive as it used to be when it was 150%,
Wow.
right? Now, a lot of people say that's crazy. What do you mean that 50 or 70% is not attractive? Well, the same way that the older generation, again, this is generalization. I know a lot of older guys who are super into Bitcoin, right? That they think, I think we recently heard somebody use the term youthful, right? They're youthful in their way that they think. But the older generation generally uses the S&P 500 as their index. The younger generation generally uses Bitcoin as their index or their benchmark. And so what people are saying to themselves is, can I get a better return, right? We have started companies. Those companies have drastically outperformed the performance of Bitcoin, right? We're taking something that doesn't exist and we're creating it out of thin air. It's a very asymmetric activity when you're successful in doing that. Doesn't mean, though, that all of a sudden I'm going to go pick a stock that outperforms Bitcoin. Mm-hmm. And so I think it really just comes down to, okay, right now, the group of people who think that the Bitcoin return is not as attractive as what they can do elsewhere is really small. Over time, that number is going to get bigger and bigger and bigger and bigger. And so what you're going to see is that as Bitcoin's volatility comes down, which has been happening over the last decade, there will be certain thresholds where people say, hey, this is my savings account. but I'm going to go try to generate more of a return somewhere else. What is that number? I don't know. But there's not very many people, I would argue, that can beat the S&P every year. And the S&P is only, call it 8 to 12%. Yeah. So Bitcoin's got pretty far runway here to be able to go and say, I'm going to be able to outperform anything else you can do. And I think that's why you're going to see it continue to be a magnet of capital, is because people are saying, you know, I repeat this pretty much on a daily basis at this point. If you can't beat it, you got to buy it. And if you can't beat Bitcoin's return, you got to buy it. And there are almost no institutions anywhere in the world that can consistently beat a 70% compound annual growth rate. And so naturally, you're going to see more and more of these organizations buying Bitcoin. Gold's still a great option, but I do think that as young people ascend to the positions of power and influence inside these big organizations, they are going to convince their organizations to buy Bitcoin. Doesn't mean they'll sell gold, doesn't mean they won't buy more gold, just means that Bitcoin is going to go from zero allocation to some percent. You get a lot of organizations that do that. Bitcoin's price should rip higher. What have I been telling all y'all? I've been saying this for weeks now. I was saying this months ago, and people don't want to listen to me. I can only do the best I can. I can just look at the data. I can tell you what I see. And I told you that the entire risk was not high inflation, it was deflation. That we were going to see inflation continue to crash, that we needed to cut interest rates. I'm yelling from the rooftop. I tweet like once every 2 or 3 days. Cut rates now. Inflation is crashing. It was at over 3% in December, according to Trueflation. It now is at 1.4%. That is a 50+% drop in inflation. We must cut rates. On top of that, how many times do I have to say? Tariffs are not inflationary, they're deflationary. Why? Yes, the price of a good goes up. It does not go up the same rate as the tariff. So if you put a 20% tariff on China, which we did in 2018, the average price went up 4%. Didn't go up 20%, went up 4% because there's multiple stops in the supply chain that eat some of that cost. And so the end consumer saw a 4% increase in those products. But why did inflation not show up? We get a lot of stuff from China because when you put the tariffs there, it's a consumption tax. If you tax something, you get less of it. And so naturally people start consuming less of that type of good. And so they either shift their preference to domestically manufactured things or they stop spending as much as they were previously. And so you're seeing the economic slowdown. The risk is actually the economic slowdown. It is not inflation, no matter what they say. All the economists agree. Tariffs are inflationary. Be scared of high inflation. Go read the headlines. These people are dumb and they're wrong.
With Bitcoin's historical compound annual growth rate hovering around 70%, even in a more mature market, there are very few, if any, institutional investors who can consistently outperform it. So the rational move? Allocate as Bitcoin matures and its volatility decreases. It will go from being seen as a speculative asset to a savings vehicle. And with that transition, even the most conservative institutions will be forced to admit Bitcoin belongs in the portfolio. Please like and subscribe.